I get asked all the time, Spencer, how much income do I need to retire? And obviously that's a very specific and individualized question, but we're going to go through some examples today to help you figure that out for yourself. My name is Spencer Ford, Certified Financial Planner with Conservative Financial Solutions, and thank you for watching this video. How do you figure out how much income you need in order to retire? There's actually a fairly simple calculation that you can do, and that is take your last 12 months bank statements, total up your paycheck deposits, and then divide by 12. So most people are paid based on 26 pays a year, so that means that there's 2 months out of the year where you get paid 3 times. Those are my favorite months, but you'll take all those deposits over the last 12 months and then calculate your net income. That's after you've paid taxes, after you've contributed to your retirement accounts, divide that by 12, and that gives you your monthly amount. So I'm going to walk through a more specific example for you so you can catch some of the different nuances that are in there as well. So I'm going to pull up a different screen here just so I can write on it. And if we just think in terms of a married couple, so we'll say, hey, we have John here, and John makes $110,000 a year, and we have Jane, and Jane makes $50,000 a year. So for John, if we look at his income, after he pays taxes, after he contributes to his retirement accounts, what he has directly deposited into his bank account bi-weekly is $3,173. So $3,173. And for Jane, same situation, she has $1,442 directly deposited into her bank account. So if you multiply this net income by 26 times, that gets you $119,990 a year. So, but we can't stop there necessarily. So specifically for John and Jane, they're still paying on their mortgage, but their plan is to have their mortgage paid off prior to retirement. So if you're planning on having your mortgage paid off prior to retirement or shortly after retirement, you may be able to deduct this from your net income needs. So for John and Jane, they're paying $1,200 a month of principal and interest. Be careful there, because if you're escrowing and you're paying taxes and insurance from your monthly payment, you're still going to have taxes and insurance in retirement, so you can only subtract your principal and interest amount. So their principal and interest amount was $1,200 a month or $14,000 a year. So we can subtract that from their net income need, which brings them down to a total need of $105,990. In addition to having their house paid off, they each contribute $250 a month to their Roth IRAs. So that's $3,000 for each of them, or $6,000 total. So again, that's money that they make, that's money that they have coming into their bank accounts, but they're saving that in a separate account, and you're not going to need to do that any longer when you're retired. So we can subtract that $6,000, which leaves us with $99,990. And as long as you're okay with rounding up by $10, John and Jane's net income need is $100,000. So there's a couple of other things that I want to point to when it comes to figuring out your net income need. Number one is there may be other expenses that are going away prior to retirement that you can look at and deduct. Like if you're still paying on a student loan that's going to go away, or some credit card debt that you're paying down, or personal debt, or a home equity line of credit. Obviously, if you're going to have those paid off prior to retirement, then you can subtract those from your net income need. But the biggest thing with that is if you are going to have that debt paid off prior to retirement, you can't then raise your standard of living. You need to cross-save that income so it doesn't become part of your standard of living. Now, if you have an automobile loan, I encourage families not to deduct their automobile payments. If the automobile is going to be paid off prior to retirement, don't deduct that from your net income need. The reason being is because you can be in retirement for 20, 25 plus years. So you're going to need another vehicle in retirement. So we don't want that payment to go away or the ability to make a payment for a vehicle to go away. The other thing is I encourage families not to deduct from their net income need work-related expenses. So don't deduct what you're paying for gas or for eating out and things of that nature. And there's two reasons for that. Number one is inevitably families tend to overestimate those expenses, and so they debit too much from their net income need. And the other thing to keep in mind is you are now retired. Every day is Saturday. So if you're anything like me, I do the most of my consumer spending on Saturdays. And with every day being Saturday, you're going to want to have a little bit of flexibility in there for when you're taking out the grandkids and going to Dairy Queen or taking them to the park and having a little bit extra spending money. That's why I encourage families don't take off those work-related expenses. So that's how you very easily go through an income need calculation for retirement. If you have any questions, please let us know. We'd love to hear from you. And thanks again for watching this video.